welcome to Monday's Market Outlook. I'm Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing, and the market's really wallowing around looking for direction today. So let's take a look at the flight schedule to see what's really going on. Some conflicting news out of China yesterday. Industrial production and retail sales came in really strong, but late last night, Sunday night, their trade numbers came in just absolutely fell out of bed. But really don't think that's going to impact what's going on in China. China has done a pretty decent job of pulling out of their nosedives, skimming along the treetops, and now they're starting to climb a little bit. Trade numbers certainly a little concerning, but retail sales, industrial production, very strong. Great article on CNBC about this. China's exports disappoint but won't derail recovery. I agree with that. We have a long-term bullish diagonal in our primary live trade brief model portfolio on the FXI. We bought some deep in the money Jan 15 29 calls, and we're selling front month upside calls. And actually these 37 calls, these 37 calls that we sold are actually in a little bit of danger here since the FXI has been on a tear. Let's take a look at the past 20 trading days and see what's going on with the FXI. It's a good proxy for China, folks. It's an ETF. It's the iShares China 25 index. I mean, not a rocket surgeon here, just a former fighter pilot and political science major, but that's a little bit of a tear of the FXI here. Probably due for a little bit of a pause, especially on the conflicting numbers here, but very bullish on China long term and liking our FXI diagonal, fitting right in with our strategic mindset and the tactic. The diagonal fits perfectly. Today, really nothing on our radar that's that important. Just some news from our European friends across the pond. Not really looking that good. That shouldn't be too surprising to us. The European story it continues to perplex the markets about what's going to happen with Greece and Spain. Good article in the Journal, I believe it was on Friday or over the weekend, about how Germany is at risk of potentially entering a recession, and that would be bad. As Europe's banker, Germany entering a recession won't be good for the overall market. So some poor numbers out of Europe this morning. Tomorrow on our flight schedule, we get some trade numbers and wholesale inventories. Then on Wednesday, a little more interesting stuff. The FOMC statement. Obviously, the Fed funds rate is going to stay where it is. They've already told us that it's going to stay that way until 2015. But we really want to see what they have to say at their press conference, because we expect to see a potential policy shift out of the Fed, going from giving us dates like, hey, we expect to keep our interest rates low through mid-2015, to actually having a target. Because kind of like, the Obama administration telling the Taliban, hey, we're going to pull out of Afghanistan by 2014. You really shouldn't use dates when you're thinking about something strategically and then back into it. You should really have a target, right? So same thing with the Fed. The Fed, we believe, is going to come out with, hey, we're going to keep interest rates low until we see unemployment around X rate, instead of giving us just a time frame. So I'll be looking at that on Wednesday. Thursday, obviously, weekly unemployment claims, but more importantly, going to see a lot of retail sales and some inflation numbers. I have a very bad position on A&F right now, Abercrombie and Fitch. They got upgraded again today, and we're seeing highs we haven't seen since May as it went crashing down. So going to be looking at those reports on Thursday, along with business inventories. And then on Friday, getting some CPI and manufacturing PMI, and also the cap utilization rate in industrial production. So towards the latter half of the week, we're really going to get some insight into whether or not the economy is truly recovering and sustainable. And as I said, the market's kind of wallowing around today. The SPOs are essentially flat. The Dow's up about 23 right now as I'm shooting this. But I think we're still waiting on potential fiscal cliff resolution issues. Boehner and the president met over this weekend, and Boehner's office said he's waiting for a new proposal from the president. So apparently we're going to find some common ground. That's why last week in one of my model portfolios, I put on a very bullish double vertical spread into January. That's a nice bullish bet on fiscal cliff resolution, and it's already up about 76%. And we took in a credit to do this of $420, and it's already up $320. So a nice swing there in that position. So again, having a great time trading in our model portfolio. Let's take a look at our month-to-date performance in our model portfolio. And obviously, this is the second week of the month. It's only the second week of the month, and we're up over $13,000 on about $50,000 in capital. So that's a nice return, over 20%, in essentially a week, 5-6 trading days. So that's looking pretty good. If you want to see how we're doing this, make sure you stop by this URL and register. TopGunOptions.com/trade-the-open. And on Wednesday, I'm going to do 2 live trade briefs, one at 9 and one at 3. So we're going to trade the open, trade the close, and I'm going to add a couple actionable trades to our model portfolio, so you can see me live in action and see how we manage risk, we hedge, and we find potential profitable opportunities live in the market. And we'll do that Wednesday morning. So go to trade-the-open and go ahead and register, and I'll see you all Wednesday morning. And then I'll be back with Top Gun Options Sit Rep as well for tomorrow. Happy hunting. Make sure you hedge.